for couples to really help the relationship out financially. I think having an open conversation about your finances is the first thing, where you can both sit down and talk about them and it doesn't erupt in a fight.
People in relationships and they had been dating and then they got married and then it was, oh yeah, just so you know, I have these student loans or I have maxed out credit cards. So you need to, not saying that you have to justify it, but is doing that act also bringing in revenue, or is it making a relationship better? Is it making betterment within how you're going through your day to day? We always look at it as, financial, the dollars, the pennies, the cents, whereas, well, maybe you have a relationship with a farmer, or maybe somebody else, has a garden that they need help tending to.
Yeah. How can you exchange your times, talents, or your treasures in exchange for what you need? Hey, Dr. Julie.
Yes.
What did the goat say to his girlfriend when he gave her a Valentine's card?
I don't know. You're going to make some weird noise. What?
Happy Valentine's Day, baby.
Oh my gosh. Sorry, everyone.
Nailed it. Welcome back to the Prime Podcast. I'm your host, Dr. Skip Wyss, and as always, I've got the beautiful, wonderfully radiant Dr. Julie here with me, working on well over 100 episodes together. Now we're well in. I think this is probably episode for you with me. Like, you've been on 107 episodes with me. Feels like just yesterday.
Yeah.
Sitting next to each other, talking about communication.
Having this conversation with somebody else this morning. She's been married for 50 years. 50
years coming up here. I mean, incredible. And I'm sure they've had a number of talks on this. Today, everybody, we are talking about navigating our relationships back and forth with finances.
Well, and I think this is kind of that one, like, I'm thinking of the word budget, because there's like, we have to set a budget. And sometimes that has like a negative connotation. It's the same. I lump that together with the home work balance. And I don't think there's any such thing as balance. Just it's where you focus of what that balance should look like for you, because that's just what it is. There isn't a work-life balance. And I think that same thing goes into effect with when we're talking about finances and budget. It's more so, well, what are your priorities? What are your actions that you want to do in this next year? What are your non-negotiables? What do you need to do together as an individual, as a couple, as a family? And sometimes there can't be a monetary value on it, because some of those things are what gets you through the day to day. And to set a budget of, no, we can't do that, then that also jeopardizes your relationship or can put a stress or strain on it.
That, like, my first point is, you nailed it, is why financial alignment matters. Because if we don't have that, and one of us is a little bit more apt to spend versus ones that aren't, and not knowing our priorities of what the money needs to go towards right away, can cause a tremendous amount of financial stress, whether it's between you and yourself or your spouse. Like, if I go and just willy-nilly spend money, and I think there's a set amount. We have friends that are well off, and they have set amounts with each other that they don't have to check in on. But I think you don't have to be well off to know that. Like, in your relationship, do you really need to check in with your spouse if you spend $20? If you're in that type of relationship where you do have to, that can cause a lot of stress, because then you don't know what you can and can't spend money on. And
so I think then it's also understanding, okay, well, what is the expectation? Is it that we can't spend that $20, or I need to check in for that because we have this bigger thing that we are looking to do together? And I think it's that understanding. And sometimes I think if that is that you feel like you need to check in with those $20 increments of refocusing and understanding, oh yeah, that's right. This is why we're, saving, or this is why we're, why I can't spend that $20 on that coffee or that frivolous type of a thing.
Yeah, I think that is a perfect point. Now, here's another thing too that I want to talk about really quick, is understanding that we have an understanding together that no matter how hard things get financially or how easy they get, that all of it is a blessing from God. And that God truly does provide for us and will never let us go without. Now, if we do go without, it may be on frivolous things, but the core stuff that our family needs to survive is always going to be provided for us. It will always be there.
Or sometimes I think it's being open to other opportunities of that maybe you weren't expecting it coming in one matter or the other. You know, and I think that's where sometimes we always look at it as, you know, financial, the dollars, the pennies, the cents, whereas, well, maybe you have a relationship with a farmer, or maybe somebody else, you know, has a garden that they need help tending to. So there's other opportunities that, you know, we need to be open and aware of, that sometimes these things show up that we're only looking at it from one avenue.
Yeah. How can you exchange your times, talents, or your treasures in exchange for what you need? Absolutely. And a lot of the times, if you don't necessarily have the treasures, you have time, because if you don't have treasures, you probably have a ton of time because you're probably without work, or work's gotten really, really hard. And then you have your time and your talents. So you can go and help. You can try to make money based off of what you do as a couple, or just barter. Like, there's ways around this, but God will always put those opportunities in front of you if you just look for them and you allow yourself to be open to it and not close off and think that everything is burning down around you.
Well, and that's say this is like a coaching concept that we go through of like the new zero. This is especially for businesses, but you all can use this within your personal life. Of at one point, you know, maybe you started a joint checking, or if this is a business account, you had that set number of, okay, as long as I have $100 in my checkbook, I'm okay. And so you'd always check that. And then if it would get below that, you would get anxious and you would get antsy, but you're able to still get through day by day by having at least that $100. And then more money comes in, or business becomes successful. And then it's, you know, 200, or maybe it's 500. And so 500 becomes your new zero. That you feel more comfortable that as long as there's $500 in there, I'm okay. But then if all of a sudden it goes to 450, that panic, that anxiety sets in, because now you're, oh my gosh, what am I going to do? Meanwhile, maybe a few weeks ago or months ago, you were okay with just that $100. And so I think sometimes we just need to reframe what is actually going on around us, and what do we actually need to survive? What is our zero number that we truly need? We get comfortable having that larger number in our account, but do we really need that?
Yeah, but it's alarming when you start talking to people and realizing they've got $15 going out here, $10 going out here, $90 total in monthly subscription fees for streaming things online. And then it starts adding up and adding up. And before you know it, you have $300 to $400 in expenses you didn't even know were there, that are just conveniences. And can you really do without them? And yes, you can.
Well, here's a little asterisk this, because we're still at the beginning of the year. And so one of the best things that you can do, and I tell this to all my coaching clients, is to cancel your credit card and request a new one.
Oh, yeah.
So if you are kind of like, oh gosh, I don't know where all this money is going, or you can't reconcile, or you're scared to reconcile your credit cards, or things just feel out of control, cancel your credit cards, request new ones, and that will automatically stop any of those subscriptions that you have.
It'll trigger all those automatic
And that allows
payments.
you then to reevaluate and figure out what your priorities are, and are they actual necessities.
And plus, it's a fraud check. Just imagine if those were small amounts just biting off at you every month. That creates a lot of financial stress. And in fact, a good way to think about this is every time you want to go and put some money towards something, I don't want to say frivolous, but if it's not a treat for yourself, let's say it's a habit. So let's say you were spending $50 a week on cigarettes, or $100. If you stopped smoking and just took that $100 and stuck it into an investment somewhere, even if it's in crypto, you're going to make that money back. It's actually going to work for you instead of against you.
So I would think if you are here, we're at the beginning of the year, and if you can go back to previous podcasts, we've talked about non-negotiables, and sometimes it's kind of like I don't even know how to start. I would sit down, depending upon how old your kids are, but truly ask them what they want to do for this next year. A big thing that's usually a big expense is family vacations.
Yeah.
And one of the eye-opening things that we noticed with our kids, we thought, because we both, like me growing up, we would do a family vacation, but we had it like we drove in the car. So we would drive to Florida. And that was something that we would look forward to as a big vacation, and do the Disney thing or Universal, those types of things, or go to big amusement parks, which cost, couple dollar signs.
Yeah.
And when we would work through the stressors and wonder why, like our kids, like, why aren't they appreciating these things? Finally, they said, well, actually, we would just like to either stay home, or we would love to be able to just go to the beach and dig in the sand. Right. So then that brings it down from like $3 signs to like $1.50 signs. So I think as you're thinking about this budget as a family, figure out what your kids truly want. And I understand like all families want to be able to have memorable experiences. Last week's podcast was, okay, what does that experience look like? It doesn't have to be something huge. It's the everyday things as well. So I think getting that input from family of what that looks like, and then sit down together with spouse or significant other and look at like the things that are musts, right? If you have a home mortgage or you need to pay rent, right? Those are musts. If there's a car payment, like that's a must. So of taking out those things that are like the non-negotiables that you have to pay, and then let's look at what's left over and what other things do we want to have sprinkled in. And instead of always telling each other like, no, we can't, it's just maybe not now.
We're not there yet. Yeah. We're not there financially yet, or we don't have. It's not that we don't have the ability. We're just not going to spend our money in that
and
spot
it shouldn't be a no, you can't do that. It's okay, well, why is that important? Like sometimes like hair, right? Sometimes like a woman getting their hair done can seem like a frivolous expense.
But is it?
However, correct. So for in that instance, is it the hair because it makes her feel better, that she can show up as a better mom? Is it for her career that is, I don't want to say a requirement, but that's how she needs to be able to show up. Maybe she can make better sales for that. So understanding why each of these things show up as a line expense item is also important. And sometimes we can't assume that our significant other knows that or understands the value to that. So there should be something that if there is an expense, there should be income that comes based off of that expense.
Yeah. Does that expense drive revenue?
Correct.
In that revenue, it doesn't have to necessarily be money coming back in. That revenue can be your spouse or yourself's overall personal value to yourself. Do I look better with the haircut? Do I hold myself higher? Do I feel better about myself?
I think you could think of that with many, many different things.
Right.
But again, if it's part of like that you need to show up as a certain way, maybe those nails are what makes you look manicured and well put together. And that is that value. But again, you can't just say it, I have to do it for work. You need to, not saying that you have to justify it, but is doing that act also bringing in revenue, or is it making a relationship better? Is it making betterment within how you're going through your day to day?
I think that's the best way, and most important. So I just saw it as one of those expenses that's kind of out there because it consumes so much time. And when I deal with women that do a lot of business, they don't like wasting their time sitting somewhere. They want to keep moving. Now, next steps. What are some? So let's talk about just some really easy, implementable takeaways for couples to really help their relationship out financially. I think having an open conversation about your finances is the first thing, where you can both sit down and talk about them, and it doesn't erupt in a fight. Like there's no blame game here. Unless something really crazy happened. Like if I went and spent, $400 on a pair of shoes and me and you didn't have the expendable income to do that, that would probably cause a little bit of a rift.
I think it goes back to, living within your means and understanding, okay, just because I'm at this point in my life right now doesn't mean I'm always going to be at this point. And so I don't think you can look at it as, well, I can't get those shoes and now I'm upset with her. It's okay, I can't get those right now. Is there something else that I can do to speed up my opportunity to be able to get those shoes? Or is there, like, if it's like the opportunity is only there to get that pair of shoes at that point in time. We'll figure out, okay, if I do that now, then what else can I not do? Or what thing do I need to remove, for this month? Or if you get that item, then maybe it sits on the shelf for you not be able to wear it or to use it until maybe you reach that goal.
Well, I was going to say, what's the step you got to hustle towards?
Right.
Turn that into a goal where you don't have to put them on right away. Our son did that with a 3D printer. We actually purchased that thing on Black Friday, but he didn't touch it till mid-January when his grades came out and he met his goal. And if he hadn't met his goal and met the GPA we had talked about, it'd still be sitting on the shelf in the basement and he hasn't touched it yet. So where are those things that you can really work towards and make it a positive thing? And that's always one of the biggest things is how can you make a positive out of that negative? Or how do you make a positive out of that expense? In a relationship, usually one of you has heavy baggage around finances versus the other. Money can trigger a lot of fears. Money can make you think really bad things right away. Like if things get a little tough, you immediately feel like you're going back to your childhood where you may have heard your parents argue over finances, live paycheck to paycheck, maybe had a really unfortunate circumstance of having to go to like a food bank to get food for your family. Like these are all things can be really negatively bound to that.
Well, I would say we've had relationships, or we've heard of like people in relationships, and they had been dating and then they got married, and then it was, oh yeah, just so you know, I have these student loans, or I have maxed out credit cards. So again, just if you're beginning in a relationship, to have that open communication, to understand, okay, what are we all getting into? And there's many resources on, how to tackle that and to do balance transfers and to get that all over into one credit card. So you're only paying one payment versus 6 payments. And I mean, there's people that can help with that. There's companies that can help with that. I'm well versed in that I can help with that. But just to know that communication needs to happen, otherwise you're traveling down a relationship built on some rocky foundations. And because finances are such a strong component of how that relationship is built, it's important to be open about that.
Yeah, I think, absolutely. We've had tons of people we know that get married and all of a sudden there's $35,000 in credit card debt, or somebody's got a credit score of 300 versus 700 and what they have to do to repair that. And that's another thing, like if we talk about that just for a minute, there are certain financial people that are out there teaching like you should never have a credit card, you should only work with debit cards. Debit cards are the worst thing you could have because they don't build any credit. And your credit is what's built for your credit score, which allows you to then leverage debt and help yourself get ahead versus sit behind. And some of the most successful people in the world are the ones that actually know how to leverage debt and not completely stay away from it. Because debt, you can leverage, you can multiply it, you can use it for you instead of against you, and it's not necessarily a negative thing.
It's not a bad thing.
It's not a bad thing. Granted, $45,000 in credit card payments is rough. Crazy high interest rate, but that's totally different. Hey, Dr. Julie, real quick, you have always talked about this credit score thing. How do you navigate loans when we're looking at scoring them, as far as, is it a good loan, a bad loan? Is this going to really affect the income in our house? How do you do that?
Yeah, so I would say right now, if you are kind of like, oh gosh, like we're hitting some hard points right here with multiple credit cards or auto payments, and what do I pay first? How do I get ahead? One of the easiest calculations that you can do is take whatever that outstanding balance is that's left on that loan and divide it by your monthly payment. And so let's just, for example, we're going to go from a 0 to 100. If that calculation, when you divide that number, if it comes back between 0 and 50, that's really bad. That means that number, that loan is keeping you in debt. That would be bad debt. If you run that calculation and you're within 50 to 75, that's kind of like okay, not so bad. I'm not as panicky about that. Yes, it's still debt, but it's not as bad. Okay. But if you have a number from like 75 up through, a 3-digit number, 100, 200, 300, that is good debt. So that isn't anything to be scared about. You shouldn't be in a hurry to pay off those things. Just pay the minimum balance. Where those types of things usually happen if you have a home mortgage. Your home mortgage is typically, because it's amortized over 30 years, when you do that calculation, you're going to get like a number of like the 200s or the 300s. Student loans usually hit really high. That means don't be paying extra payments to pay down that mortgage quicker. Save that money. Use that money to pay off those low scoring loans. Auto loans, absolutely horrendous. Those are going to be like in your 20s, your 30s. Any additional money that you have, you're going to put towards that to pay it off. Even some of those high yield, high APR credit cards, right? You're thinking, oh my gosh, it's 32%. But if you run that calculation and that number is higher than your auto loan, you're still going to pay that bare minimum, that low monthly payment for that credit card, and you're going to put any extra money towards that auto loan to get rid of that.
And that's great advice. That's why I wanted to talk about it, because it's something that a lot of families and even individuals can use right away to try to start helping themselves, freeing up cash, decreasing that financial load on their family, and being able to have those conversations back and forth and take the emotions out of things. And when you take the emotions out, making decisions is actually fairly easy financially. It's either we can or we shouldn't.
Correct.
That's really what it is.
It's not you against me. It's well, let's just run the number, you know, and like, hey, if it's going to be a 76 or high, then yes, we can do it.
Let's jump
so
into
kind of
it.
set that tone of, it's no hard feelings. It's, hey, it's just maybe not right now.
Not in the cards right now. And that's the way we want to view it. So we hope you guys really found this one helpful. I know this was during this time of working on relationships and in love and all this stuff, but remember, finances are one of the leading causes in divorce. They're one of the leading causes in separation, and they're one of the leading causes of resentment in a relationship, is just understanding and having good, healthy financial conversations with your spouse and significant other.
I think just understanding where each of you are with numbers, and before your marriage, like what was childhood like with numbers and finances. And so that is some of that past trauma that can be brought into a marriage and relationship that, unless you discuss it and talk about it, can just lead to more battles down the road.
It can. So everybody, Dr. Julie and I are trying to get this to as many people as we possibly can throughout the United States and the world. So share this with as many people as you can. We know this one will really benefit you. And also comment below if you actually have a financial budget in your family. Like, what are you doing to help change this stress?
Give us a thumbs up if you have one.
Yep. And as always, go out there, get it done. Have a great night. Bye, everyone.